Anybody that goes on social media has seen a lot of posts, people talking about buying NVIDIA. In fact, our mutual friend and influencer, Ian Dunlap's been one of the biggest proponents. But you're saying that's anecdotal. The actual data shows that retail investors aren't that excited about all this AI.
Yeah, where did everybody go? Because retail trading volume is really low right now. It's about half of its levels from where it was in January, where it was actually peaking, but also searches around stocks, stock trading, meme stocks, NVIDIA, AI stocks, pretty low, and stock searches in general, if you look at Google Trends or at Investopedia, which is a good proxy for it, much lower than it was at the beginning of the year, much lower than it was in the last 2 years.
All right, so a lot of excitement about AI, but how does it compare to some of the peaks in the market during the pandemic? We mentioned the Reddit rebellion and that whole meme stock craze. That was just its own thing. But in general, during the pandemic, we saw elevated trading. With all this interest about AI and the thought it could disrupt, what are we seeing from retail traders overall?
We're seeing them nibble a little bit because there's always interest, especially among our readers. These are active traders, retail investors who want to put money to work. They're looking for a theme. So we just started to see top AI stocks creep up in our top searches. We've seen top NASDAQ ETF, top NASDAQ stocks start to creep up. But generally, Frank, people have been playing defense. Defense wins championships, as we know, but you got to have offense, especially in the face of this rally. Look at the NASDAQ 100. Look at these chip stocks. A lot of retail investors sitting back.
I thought you were about to make a Miami Heat reference, but you didn't.
No, let's let it be.
All right. So let's talk about what they're searching for. Generally, what people are searching for, it tends to be where they put their money, or at least they're thinking about put their money. What are the top searches on your site?
Well, people, as I said, have been playing defense. So they've been looking for the top CDs, both the 3-month all the way to 18 months. Where's a safe place to put their money? But don't forget, that whole banking crisis and the bank failures got a lot of people back on their heels, not really trusting financial institutions, not really trusting the money. So they're looking for that. They're looking for high-yield savings accounts still. Again, a lot of defense being played here, and they're starting to nibble again at AI, starting to nibble at NASDAQ stocks. But generally, people are like, I'm not so sure here. There's still some anxiety, and it's personal finance related.
All right, so rationalize this for me. I'm looking at some of your data. Some of the top searches are top NASDAQ ETFs, but generally those are growth stocks. So are you saying retail investors are seeing tech and growth stocks it's playing defense? Yeah, well, if you look at their top stocks that they hold the big mega caps. NVIDIA is one of them, and especially right now, but it's Apple, it's Microsoft, right? They go to the home cooking, the big mega cap tech stocks where they feel safe. So that's part of the playing defense. They consider those, in some cases, safe havens or value stocks. But in general, it's where's the safest place to put my money where I'm going to earn some yield over the next 6 to 12 to 18 months. All right, so it is all about yield. So what are your readers and the people who are visiting your site, what do they think about bonds right now? So we're seeing short-term bonds elevated, we're seeing long-term bonds elevated. Where do they want to kind of put their money, or at least where are they thinking about putting their money? Yeah, well, boring is sexy right now. So they're putting it in bonds. They're putting it in savings accounts. Yes, some people are trying to get back into the market. We have a lot of active investors, but they have been as cautious as they've been for the past 12 months. We monitor them through our sentiment survey. We do it every 2 months. They're as defensive as they've been over the past 6 to 12 months, and they've been that way in the face of a pretty good rally here. So hopefully they'll start playing a little offense because there's a lot going on right now in the stock market. All right, so today we're all about the debt deal. I know that's one of the top searches. The thing we're going to probably talk about at the end of this week, assuming the deal gets done, is the Fed. What do your readers think, or what are they looking up when it comes to the Fed? Yeah, they're always wondering what the next move is going to be with the Fed. They're looking at the Fed Watch tool we've pointed out all the time, but they're always asking that question. What happens when the Fed either continues to raise interest rates or stops? They're looking at what happens next over the horizon. So I think a lot of people are hoping that there may be a pause right here, and they want to put money to work because they really haven't been for the past 6 to 12 months.